Okay, folks, welcome back. This teaching is going to be understanding the Ict Judas Swing. Okay, the Ict Judas Swing. What ICT concepts are going to be used in this module? I'm going to be introducing the Ict Judas Swing. I'm going to be defining what the Ict Judas Swing actually is. I'm going to show you its utilization in bullish conditions and its utilization in bearish conditions. Okay, introducing the Ict Judas Swing. All right, so the price swing that sets the London session high or low is many times an energetic price swing. Now, it's going to many times be a run on stops, or it could be returning to a key price level. Either one can be the basis for this quick spike in price. Having a higher time frame understanding and implementing that higher time frame analysis to determine what direction the Ict Judas swing will form. If you look at the chart to the right here, I've basically added more dimension and detail to a earlier chart in this series of teachings. Here I've added a couple different reference points that will help solidify the understanding that creates the daily high and low, the open, the high, low, and close on a daily candle. I've started your journey in my ICT concepts with the lowest time frame possible, which is this small little segment of price action from an intraday perspective. Because if you can understand that, and as we draw out farther into higher time frame analysis, you'll see that these ideas are actually fractal and they form on all time frames. Okay, so let's define the Ict Judas swing. First and foremost, you start hunting the Judas swing at midnight New York time. Okay, so this is the New York opening price, and it ends at 5 a.m. New York time. And that's basically the entire 5-hour window that would be utilized for anticipating this price move. Now, I'm not suggesting that everyone sit up all night long waiting for this Judas swing to appear. There's some things that you would look for, obviously, but I can't cover everything in one teaching, so I'm giving it to you in small little pieces. But for the most part, between midnight New York time and 5 a.m. New York time, there's going to be a high or low formed for the daily range. Now, we understand that typically is on the basis of London high or London low forming. Now, the Judas swing is a false run that trips up traders that lack the understanding of true direction of the day. Now, this is going to come by way of higher time frame analysis and implementing that in the intraday price action. Here we have an example of a Judas swing, and I'm going to now teach you the implementation of it in a bullish condition. Okay, so here we have the euro dollar chart, and I want you to take notice that we have the Asian range applied. We also have the midnight delineation in New York. I've also highlighted the opening price at midnight. So this is the New York opening price. So whenever you hear me refer to New York open price, it's that price. Okay, whatever the opening price is exactly at midnight New York time. I draw that out to around 11 o'clock in the morning. And obviously we see the Asian range high, Asian range low. The premise is we would have to already arrive at an analysis that lends well to bullish prices for Eurodollar for this particular day. If we have that assumption and we stick to our guns, if you will, about only taking a trade based on what I'm going to suggest to you here, in your demo account, I think you're going to see there is a repeating phenomenon in consistency if you apply it. It will not give you a trade every single day to practice with. It will give you a setup a few times a week. If you look at the majors that are coupled with the dollar, euro dollar, cable, Aussie dollar, dollar yen, there's 4 markets that if you just watch those, it'll give you a wide array of potential scenarios where this type of thing forms. Now, what is the Judas swing here and how is it implemented on a bullish scenario? We're looking for an Asian range that is in a tight consolidation. We look for initial run up to trip traders in. So buy stops are hit. Traders are now long on a breakout. We wait for the market to trade down below the Asian range low to take the stops, anticipate some measure of a sweep 10, 20 pips or so. But this move below the opening price that's shaded in here, this is actually the Ict Judas Swing. Now this is a bullish Judas Swing, and it creates the low of the day inside of the London session. The London low ends up becoming the low of the actual day. So what we look for is obviously a higher time frame premise that we are anticipating bullishness or a higher close on the day, and we wait. We wait for a scenario where the Asian range is tripped by running the stops above the Asian range high. Okay, this is the first level of manipulation, and then we anticipate a move below the opening price. Preferably, we want to see it trade below the Asian range low. If you were to trade just below that Asian range low as an entry and use a respectable amount of pips in terms of a stop, it might get you into a pretty good trade. Below this Asian range low, to a certain degree of support, an old high could trade to. Classic support and resistance ideas would lend well here as well. But long and short, we want to see a measure of move below the opening price. See, the actual drop below the opening price is a Ict Judas Swing when the market's bullish. Otherwise, just any little movement below it, like this one here, this would not start an Ict Judas Swing. The Judas Swing is first, it leads traders in on the wrong side, and then it tears lower, going below the Asian range low, and this whole move below the opening price, that's exactly the Ict Judas Swing. My initial teaching, and when I was teaching on baby pips, when I was doing videos for that community, it was right away snatched up by a lot of traders and said, well, this is a Judas Swing, or that's a Judas Swing, and I didn't give you the details that I'm giving you here. Okay, so there's a specific element that has to be there, otherwise it's not a Judas Swing. Okay, and why did I name it a Judas Swing? I try to teach my children these concepts, and I come up with little interesting titles for certain things like order blocks and Judas Swings and things like that, and it just helps me create a language for them to learn. And it's a phenomenon that makes sense because sheep herders, they would use a Judas goat, and the Judas goat would lead the sheep into the slaughterhouse, but the Judas goat would turn away right before going into the slaughterhouse while the sheep just kept on going on. And obviously, the outcome. You get lamb chops. So that same premise is seen in price action, where they introduce false breakout here, but then the Judas goat leads price action lower, and traders that see this, they want to go short. They sell, 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 and that's actually the wrong thing to be doing. The actual price is going the other way after it goes below the opening price. So what we're looking for is the element of a bullish Judas Swing is a pop above the Asian range high, then a drop below the opening price at midnight, and then below the Asian range low. When that occurs, that's the actual Judas Swing. That's bullish. Now this is what it looks like without any of those elements on the price action. And you can see, probably doesn't give that much detail to you. But again, we add it back, let that burn in. You can see it gives a whole lot more clarity as to why price is doing what it's doing. Okay, now we're going to define the Ict Judas Swing for a bearish scenario. Okay, so we're looking at the dollar CAD here. Very similar to what we just mentioned on the previous pair, the euro dollar. Now we're going to be looking at the dollar CAD with a very similar idea. The idea going into this day was higher time frame bearishness, so we anticipate a lower close based on what we would anticipate from either a higher time frame daily or weekly. But for this example, again, the Asian range, small tight consolidation, we want to see it drop down, trip traders in right away, then run on the other side of the Asian range high. That movement above the opening price, above the Asian range high, that is the Judas Swing. This is the false or trap move that I use to get in on London setups. Now, that's not the only setup, but that's one characteristic of the setups that I use. Now, right away, some of you are going to say, well, you're holding things back, Michael. That's not fair. Well, that's why I have a mentorship. I don't hold anything back there. But I've given you enough here that if you look through your price charts, okay, even if you are not trading them live with your demo account, look for these things in hindsight, because by printing them out and creating a study log of what these individual days look like. It will build a historical reference in your memory. And even though you weren't actually in these moves, if you are able to watch price action live, you'll start to see when it should be happening. Again, the number one premise going into this, when it's bearish, we want to anticipate lower prices, momentum lower. So that way we'll be looking for, after midnight, New York time, we want to see price initially drop down below the Asian range low. When that happens, we are set to wait and anticipate the run back above the Asian range high. When it does that and goes above the opening price, at that moment, right here on this candle, this becomes the Judas swing because it's now leading people in on the wrong side. Why? Because we have already arrived at a bearish tone on the marketplace. So our analysis is suggesting lower prices, while any rally intraday at this time of day should be viewed as a suspect rally or a fake move. It's going to run up here and get everybody excited. Notice the most energy is seen with it making the high of the day. This is slow, lethargic movement below. That's typical. That's stop running below the Asian range low. Those short holders that have been trading short now in a breakout, their stop's going to be rating above here. 10, 20 pips type of scenario to unfold. That's about how far the Judas swing will reach for. Creates the high of the day and then quickly moves away. That's a telltale hallmark sign that traders have now been trapped, and any return back to it, all we're seeing is an Asian range return back to the high. Doesn't give them an opportunity to see higher prices, and then quickly accelerates going lower in the New York session. So hopefully I've given you a little bit more detail and insight about what makes an ICT Judas swing. It really is nothing more than this. Just watch the video a few times. The elements and characteristics of it are very simple. You want to see the manipulation first when it's bearish below the Asian range low, then climb above the opening price at midnight, and then go through the Asian range high. Once it does that, that's a Judas swing. You can demo trade that or do some back testing and see how this works out. Many times when you have a bearish tone from a higher time perspective, this is the type of move you'll see. Okay, and another classic sign that you're right is if it starts to move aggressively away from that high, because now it's already done its work. Sheep are getting slaughtered. So hopefully you can go through the charts and find many examples of this very thing happening. I think if you look at a large sampling of data, say 3 or 4 months, and pick a couple pairs, you'll see that this is in fact what actually happens in the marketplace, and it's very interesting to see it live. I'm never at a loss of interest when it comes to watching London setups because it's a repeating phenomenon. It's pretty classic. It goes on and on and on in terms of consistency. But again, try not to believe that it's going to form every single day because it's not going to do that, folks. There's going to be times where a setup is just really loaded in your favor to see either trade lower with a lower close or a higher close when bullish. And this is the type of scenario we are looking for. Now, here's the takeaway from this. If you don't see this phenomenon take place, it's probably better for you to stay out of the marketplace because you want to be trading in the most highest probable condition. And in my opinion, if you're looking for London setups, this is one of the best things to look for and one of the hallmarks to outstanding London sessions. Hopefully you've enjoyed this presentation, and if you'd like to find more, you can find additional teachings at theinnercircletrader.com.